Welcome to Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and again on Saturday morning at 9 on KATX and KWBY as Angela Robinson joins Terry Slavens to share important financial information to help you live life on purpose. Insurance, investments, estate and tax planning, and much more. All covered now on Life Planning 101.
It is Life Planning 101 right here on KTX KWBY. Terry Slavens with you, joined by our regular weekly guest at this time, Angela Kennedy Robinson. Good morning, Angela.
Good morning. We're going to be talking about our two primary candidates today, their tax plans, their health care plans. I'm going to be as non-biased as possibly can. Like I wrote little notes. Nope, don't say that. Do say that. So we do have a great show today. And I'm really excited as I was putting this together. And I tell you what really inspired me. I thought, we need to do something like this just so everybody understands really, we always hear about these tax plans and we heard the debates, but they didn't get into what they would do.
Yeah, the nuts and bolts.
That's right. So what we're going to do today is we're going to go over each candidate's tax plan, the nuts and bolts of it. And I say candidate. I only went through the Democratic and Republican candidate. The likelihood of a Libertarian or a Green Party getting in is
slim and none and
yes,
slim left out.
That's right. Now, in the future, that may be. But we decided to go over these two candidates and also to touch on the health care because, a lot of our business is aimed around these two things, right? And so I think it's really important for our listeners to hear what these candidates would put into place so when they go to the voting booth, then they can make a good decision based on their future, their children's future, their grandchildren's future, and so on and so forth.
And healthcare is very much in the news right now because especially if you're not subsidized.
That's right.
Some major rate increases.
Yes, that is very, very true. And so that is going to be some good topics. I wanted to start, though, today by kind of telling you a little story that I hit last week. I ran into a lady, and she was her mom had passed a week ago, and she said she was really saddened by it because her mom had taught her from a little girl that the most important thing that she does in life is goes to the voting booth and vote. And she said she remembers since she was a little girl, they would dress up in their Sunday best. And that's what they did. She said back then, my mom wore her gloves. She wore a hat. This was a big deal, and she said, her mom had told her stories of not being able to vote and the importance of that. And, I started looking up some things on the internet. Why should you vote? I was just curious what would pop up. And we forget sometimes that the ability to vote is not something that is a God-given thing. There are countries today where you have no say-so in that whatsoever. And we live in a country that allows us to have a voice and, allows you to speak what's important to you. And I think that's the most important thing. Democracy itself means the people's force.
Right.
Okay. So, if we don't go to the vote or if we don't go to the polls and we don't go vote, then what are we doing? And, there's a good quote out there. I liked reading this. It was George Jean Nathan. He said, "Bad officials are elected by good citizens who don't vote."
Very good.
Yes, it is, right? And so, I think all of us are disheartened today by our country. I would say I am because I think there's so much corruption. I think there's so much horrible things that go on in Washington that we have no idea to the extent of which they go on. Our media is just unbelievable. It's horrible. And I read something else and I thought, oh my gosh, well, that's totally true because when we talk about in our business, we always say progress starts by telling the truth. And who do you have to tell the truth to first? Yourself, right? Well, it's our government. We've chosen them. It's our politics, right? And we're responsible for it. Ultimately, we are responsible. So if you don't like it, go vote. There's a great little, it's called the Independent Voter Project, and I encourage you to go on. It's like 50 reasons why to vote. And I loved some of the things in there, but the best one of all of them was the reason you should go vote is so you can complain with integrity.
Yes. You always hear if you don't vote, you can't complain.
That's exactly right.
Go vote and you can complain with integrity.
Integrity,
I like that.
That's right. But, more so, we forget there has been 2,852,901 U.S. citizens that have either lost their lives or been injured trying to protect our Constitution. That's a big number, isn't it?
That's why we celebrate Veterans Day coming up next
That's
month.
exactly right. So, this is a very, very important time. And, if you're up in the air on things, this is going to be a great show for you because it's going to be aimed right around your life. What's most important to you.
Your pocketbook.
Your pocketbook, right? Like I say, money isn't everything in life, but it is kind of like oxygen here on earth, right? we can't live without it. So I think it's really important for us to, know what's out there and what you need to be doing. So when we come back, we're going to go through these two candidates. Again, the tax plan and the healthcare plans. You don't want to miss it.
It's all happening right here on Life Planning 101, KATX, KWBY. You can also catch it Saturday morning on KATX, KWBY, 9 until 9:30. Lots of opportunities to right before the election.
Yes.
Good information. Stay tuned. We'll be back right after this. Happy Halloween.
Happy Halloween. That's right. And last full week before voting day,
yes,
right?
And that's what we're here to talk about.
That is what
voting
we're going to talk
day.
about. So should we toss a coin? Do we want to go over Trump or Hillary first? Which one?
Ladies first.
Ladies first. Okay, we'll give the ladies the house. All right. So I thought when I was going to do this, I thought, I need to go back and not only should we talk about the tax plan and should we talk about the healthcare plan, we need to distinguish because, and I am not touching social issues here. I refuse to do it. I'm only going to touch anything to do with money, okay? But we need to review here what is the Democratic Party, what is the Republican Party, because I think it's really important to understand why they're doing what they're doing within these proposed plans. Right? Okay, so the Democratic Party, and I found this interesting. I didn't know this. They were founded in 1828. It is actually the oldest party that is still active in the world today.
That's
Isn't
crazy.
that cool?
I did not know that.
Yeah, I did not know that either. But what they look to gain, okay, is they want social and economic equality for everyone. They believe in what's called a welfare state. So that's equality of opportunity for every citizen and a distribution of wealth equally to every citizen. This is from Wikipedia, so you go on facts, not any bias in here, I promise. Okay, government intervention. They believe in government intervention to be able to regulate the economy,
No kidding.
to be able to do, to be able to go in and make sure that things are working the way they should. So big government is what you can expect. Lots of social programs to accomplish this. Labor unions, they're strong proponent of those. Universal health care, which of course we kind of know because of what Obamacare is trying to accomplish, right? Consumer protection, environmental protection, and I tell you those things because that kind of matters with her tax plan. You're going to see this. And then, of course, that protection of equal opportunity is the big thing. So, they want to protect all citizens and everybody should be treated equally and everybody should be at the same level as far as monetarily.
Right.
Okay. So with that being said, let's cover her tax plan. Okay. She wants a 4% surcharge on adjusted gross income above $5 million. Okay. So what that means is on that first page of your tax return at the very bottom line, that's your adjusted gross income. So if that's over $5 million, she wants someone to pay those people to pay 4% on anything above that. Okay.
I'm safe.
All right. Yeah. I think most of us are safe from that. Okay. The Buffett rule enacted, she wants that enacted. Okay. And this was something that was proposed several years ago, but it's kind of been forgotten. But I think it's really important. And the reason why is Warren Buffett was a proponent of it. But it's 30% minimum tax with adjusted gross income above $1 million. Okay, so now we're getting down. We're going down the line. It's not just the super wealthy. We're dealing with anybody above $1 million. That's a lot of small business owners, by the way.
Right.
Okay, we don't realize that, but most of your small business owners fit in that $1 to $2 million range. We work with them. Okay, so trust me, this is affecting business owners. It completely phases in at $2 million and limits itemized deductions except for charitable and certain tax expenditures to a top tax value of 28%. So what does all that mean? Basically, they're going to take away more itemized deductions or more ways to get rid of that income. They want to make sure that you're paying at least 28% on anything above that $1 million. Top capital gain rates. We want to change this up. And if you remember our quote from John F. Kennedy, he didn't even believe in capital gain rates. He thought it would hinder the economy. Okay, so you fast forward to 50 years, and here we have a Democrat that really wants them. Interesting, right? But she wants to add medium-term capital gain rates. All right. Right now we have a short-term capital gain rate, which is anything you've held less than a year, an investment you've held less than a year. And then you have one that is long-term, anything held for more than a year. If it's a short term, it's taxed at your ordinary income bracket today. If it's long term, it's taxed at either 0, 15, or 20. Okay. But she wants to change this. She wants to have less than 1 year, it's 39.6%. 1 to 2 years, it's 39.6%. 2 to 3 years, it's 36%. 3 to 4 years, 32%. 4 to 5 years, 28%. 5 to 6, 24%. And it takes over 6 to get to that long-term capital gains rate.
Wow.
So that means you'd have to hold an investment for more than 6 years to get that treatment.
And it seems like we're making the tax code more complicated.
It is. It is making the tax, which is, what did Albert Einstein say about that? He said, that's probably the most complicated thing in the entire world, and even he couldn't understand it.
I don't think anybody does.
That's right. Okay. So it would get extremely convoluted. I will tell you right now, they laugh at me. I have back to 2008 tax bracket sheets in my drawer, and I pull them out all the time because I'm always looking at something from a past year, but I can't keep up with it.
Right.
There's just so much, and those things are full of information, not just the tax brackets. But I think that's important. She wants to limit the total value of tax deferred and tax free retirement accounts. This is something that Obama has kept proposing as well. Is if you have over X amount in your retirement account, that's all you can have in there. You're going to have to be forced to take some out, and you can't contribute anymore. Limit tax benefits of like-kind exchanges. That matters for a lot of our ranchers, farmers, business owners that wants to transfer. And this, we don't forget this, but it applies to vehicles as well. When you go and trade a vehicle, you get to offset your trade-in with what you get, and you don't have to pay the tax on that, what value you traded in for, right? Okay, so she's going to limit all that. All right, so there's little taxes that would be cut in, and that's done real big with real estate. A lot of people do that with real estate. They do like-kind exchanges so that they can defer those taxes, and she wants to see that gone. Expand the child tax care credit for an additional $1,000 for children under 5. Increase tax relief for families by providing a 20% credit for caregiver expenses and $5,000 in tax relief for excess health care costs. So I think that's big. When you're looking at dependents and things, you definitely need to think about those situations. Establish a financial risk free on banks. Expand Section 179. This is where business owners, they can go and buy something and they write something all off in 1 year. So she actually wants to expand that. And so I think that's really good to be able to see. And then she wants to limit some of the standard deductions and increase what we pay that Obamacare tax on to pay for her health care plan. So the 3.8% that you've got going on that you pay, she wants to expand that. So we'd pay that on more income, specifically business owners. When we come back, we're going to touch on Trump's tax plan in comparison to this and hit those healthcare plans. You don't want to miss it.
Highlights of the healthcare coming up next on Life Planning 101 here on KTX KWBY. Final segment, Life Planning 101 here on KTX KWBY. There's a tongue twister. But we're talking taxes, we're talking insurance, we're talking politics. Yes.
And it is a tongue twister, the Trump tax plan, right? So today, right? But I did fail to mention one important thing about Hillary's tax plan I want to get to before we switch over to Trump. And that's on the estate tax exemption. Right now, that's at $5.45 million, and it's like on an increasing scale every year. So that means if you have over that amount of assets, that's when you hit the estate tax. She wants to back that up to $3.5 million. So that would be a pretty big. This is how she's going to pay for all these social issues. That's what happens. And the top tax rate, she wants to increase it from 40% to 65%.
Wow.
So, and you can find all of this on her website, also on taxfoundation.org. They're a great website because they actually go in and do analysis of what would happen if these tax plans were to actually go into place. And I'm actually going to tell you what their outcome is from the two tax plans, the overall big picture, at the end of the show. So let's jump over to healthcare for Hillary. Hers is pretty simple. She just wants to expand the Affordable Care Act, which right now covers about 20 million people. And she wants to let people over 55 buy Medicare and bring down the out-of-pocket expense like copays and deductibles and bring a lower drug plan cost. Now, she doesn't necessarily say how that's going to happen, but that's what the plan is, okay? So let's truffle back into Trump. Now, with his tax plan, or should I go over healthcare? Healthcare? Healthcare, since we just touched on it, it's pretty easy. He wants to repeal it all. He wants to eliminate the mandatory buying insurance. Of course, Republicans believe in that free enterprise. And I forgot to mention this. They were, formed in 1854. They're free capitalism, deregulation. So they don't believe in anything big. They believe in lots of competition to keep the markets working the way that they need to be working.
Right.
Very little oversight, just as much as is needed. No more than that. Some, but as much, no more than that, so that keeps things working at low cost. And I thought this was interesting. Here's your fun fact for a Republican. They were actually named after the dominant value of republicanism during the American Revolution.
Oh.
Yes, so pretty cool fact. But anyway, what he wants to be able to see with that health care plan is to modify the law of the sale of insurance across state lines to create that competition. Okay, and he's actually got a pretty detailed plan on his website if you go on there. Wants to have health savings accounts expanded, which you can put money into those and not pay taxes on them.
Right.
They come out tax-free. He wants those to be able to pass to heirs without penalty. Right now, you can't do that. He wants to have every healthcare provider actually set out their menu of services and how much things will cost, so you have that transparency as a consumer, and you can go and look and see how each, if you want to use this doctor versus this doctor, and here's what they're going to cost you. He says it's the only industry that we don't get to see the cost up front. And he said if we put that out there, maybe there'll be that competitive edge. That's what he's hoping to gain out of that. And then, of course, remove any barriers to entry with the drugs. And that's been a big issue. Europe has a lot more drugs available to them. Why? Well, there's a lot of barriers to entry with our market, and he wants to remove those. So, again, it increases that. And then give Medicaid back to the states. Block grant those back to the states rather than that being a national issue, and focus on illegal immigration with healthcare. He's set, his estimates are that it costs $11 billion annually in this country.
Wow.
Yeah, pretty big. So, and if he focuses on growing the economy, that'll actually cover the Medicaid needs and the CHIP needs and all of those things. So that's his plan. Now let's get to his taxes, because you see the differences here is like, okay, so Hillary she's wanting to expand government health care. She has to pay for it in a certain way. So the taxes are raised. You're going to notice with Trump, he's trying to pull back that government health care. So his taxes are able to go down. And that's how that kind of works. He wants to take the current 7 tax brackets to only 3. Low income earners will have 0. And I thought this was interesting. Now, this is on married couples. So if you're single, you can just calculate this in half. If you make less than $75,000 a year, you pay 12% in tax. 75 to 225,000, 25% tax. Over 225, 33% in tax. The highest rate today with Obamacare tax included is 43.4.
Wow.
Okay, so that's a pretty extreme difference, right? He also wants, of course, the Obamacare tax to disappear. Personal exemptions will actually be done away with, but he wants to increase the standard deduction to $30,000. And right now it's like $12,600, I think is the last time it was. So I don't have that in front of me, so if I'm wrong, you can definitely tell me. And he wants to repeal estate tax for, except for estates over $10 million. And they're not going to be able to get their step up in basis. So, when you have a piece of property, it doesn't automatically step up to the new basis. It's kind of a wash in that respect. He does want to increase some things for childcare for income earners below $500,000 and give a rebate for earners less than $62,400 of 7.65% on anything that they can't get through the childcare tax credits that they'll be able to deduct on their tax return itself. So I thought that was an interesting thing. He's really pro-dependent care, which is good. And, he wants to reduce the C corporation tax rates and bring money back into the U.S. And if people do that, he's going to give them an incentive. It's only going to cost you 10% up front to do it. It's pretty cheap.
Yeah.
So the whole goal is to get money back here, not have it spread all over the world with companies that are here in the U.S. The current C Corp tax rate is 35%. He wants to lower that to 15%. That's pretty big. All right. And so what does all this mean? Well, the Tax Foundation determined on average, and I promised I wasn't going to do bias here, and I'm still not going to do bias. This is based on facts, okay? So you can go to taxfoundation.org and look at all of this. They do studies, but they determine on average that taxpayers across the board, doesn't matter where you're at income-wise, are going to receive a cut on average of $1,818 under Trump's plan.
Okay.
Doesn't matter where you fall. Wealthy, non-wealthy, whatever. Everybody's going to receive a cut. And on Clinton's plan, it doesn't matter where you fall. On average, everybody would see an increase of $176 in taxes.
So a very small increase under her plan and a pretty nice decrease under Trump's plan.
That's exactly right. So, and that was done in September 23rd. So that
pretty
was
relevant.
It is. It's very recent. Very good numbers for that. And they've really, done a good job on these websites. I encourage you to go on there. A lot of people don't know this, but if you go on these candidates' websites, you can read about all of this stuff. And it's good to do that before
do your own research.
Yeah, do your own research. Go, or use the researcher in your family to go and take notes and figure out what you need to be looking at and what's most important to you. I think it's just really, really important. We live in a day that we forget some of the things our founding fathers taught us. And Benjamin Franklin, he was a huge person in the American Revolution. And someone asked him, after all of this was written and everything was put in place, he says, so what do we have? Do we have a republic or do we have a monarchy? And he said, we have a republic if you can keep it. What does that mean? It means we got to get out there and we got to vote.
You got to vote.
Yes.
That's what it's all about.
Yes.
And it is. It's people have fought for us to have this right, so we need to take advantage of it.
That's right. With that, my name is Angela Robinson with Kennedy Financial Services here in Eastland, Texas. We appreciate all of our listeners. If you have any questions about anything or would like to know any information, please don't hesitate to contact us. You can email us lifeplanning@kennedy-financial.com. With that, God bless America and go Cowboys.
Monday morning at 9 o'clock on KATX and KWBY for more Life Planning 101.
Advisory services offered through Smart Money Group, LLC, a registered investment advisor. Securities offered through Calton & Associates, Incorporated, member FINRA SIPC. Kennedy Financial Services Incorporated is an independent of Calton & Associates Incorporated and Smart Money Group, LLC.